So for those of you joining us now, welcome to the 2018 IFX Expo Hong Kong. So cryptocurrencies was the hottest topic in 2017 and will probably stay that way this year. The new market is nowhere near stability, as we saw during these last 2 red weeks. And that's why the panel members have a hard work in providing us with clarity and hands-on tips. So, Alex, please take it from here.
Hello, everyone. My name is Alex Neckerton. I'm the Managing Director at Nextstream Global. My company does consulting for brokers and for other crypto-related companies in terms of setting up their crypto offering. So it's in terms of CFD crypto trading. That's where really a lot of my area of expertise is in, and also physicals. And to kick things off, I'll do a little bit of a fun icebreaker here. There's a lot of opportunities. Even yesterday, just being at the cocktail hour, I mean, cryptos is definitely the topic that comes up the most. And I already learned a bunch of new things and new opportunities. Maybe to kick things off, we could go one by one, and you guys could tell me what you think is, what your name and what company you work with, and also what you think is the biggest opportunity in cryptos right now. I think my perception changed just last night alone, just from talking to people in terms of what's hot. Maybe I'll start over here at the end and go back to me.
Thanks, Alex. My name is Dave Chapman. I'm the Managing Director for Octagon Strategy. Octagon Strategy is Asia's largest OTC trading desk. We estimate we're number 3 globally in terms of volume. We do billions of dollars of flow every month, and our demographics include high net, ultra high net worth individuals, funds, family offices, private banking, institutional flow. Where I think crypto is right now, I think there is probably an enormous amount of admitted hype, but I do actually see an enormous amount of legitimacy enter the market and the state of play where we are right now. I think the tail end of 2017 was a very difficult time for the Bitcoin and the crypto naysayers. We saw the 2 of the world's largest, longest operating, most regulated exchanges in the world start offering Bitcoin products, admittedly settled in cash. But I mean, the fact that we now have positive regulation, very well established and recognized institutions actually playing in this sector, I can only reinforce with the demographics of the counterparts we trade with now that Bitcoin is no longer seen as a fad. It's not the comedy that it was when it sort of started to come of age in 2013, 2014. There is an enormous amount of piqued interest in this asset class. In the previous panel, I had got on the tail end of some comments saying that there is still a lot of room to mature. I completely agree. But when there was a remark made in the previous panel around how this asset class, isn't as well regulated or isn't as mature as traditional asset classes, and that a lot of people can get into trouble, I find that quite ironic, given the fact that Bitcoin was invented to actually overcome some of the serious issues we've had in the financial markets. Obviously, I'm very bullish on crypto as a whole, but admittedly, there is still an enormous amount of room to grow and mature.
I think we forgot.
You can't see me, I'm invisible here.
Oh, wow. I'm sorry, Tom.
Amazing.
It was in the red. Sorry, I'm obviously colorblind.
Anyway, so hello, I'm Tom Higgins. I'm CEO and founder of Goldeye. So we've operated for nearly 10 years now in the FX, CFD, and now cryptocurrency space, selling liquidity management and risk management solutions to people. The interesting thing I think I've seen from our perspective in cryptos is people in our world dived in, not understanding anything about it at all. They thought, we'll B-book the whole thing because we can't cover it in the market properly. A lot of them got their fingers burnt, and it was really quite dangerous for them. And so they got in at the hype stage. We saw some withdrawal at the end of the year because they were losing too much money. The futures markets came in, which will stabilize things enormously, which is, I've always thought that was a really good thing to happen. But there's not enough clearers who are clearing them yet. So what my view is the futures markets, once we get those clearers coming in, will provide a really good opportunity for prime of primes to cover in the futures market and offer CFDs out. And then you're going to see a big re-entrant of brokers offering cryptocurrencies because they can cover them in the market. We will obviously need the futures exchanges to do more than just Bitcoin. But once, I mean, I used to work in the futures exchange world, so I know them very well. And once they've established a working contract in Bitcoin, then they'll move on to other cryptocurrencies. So I think it's very interesting, but I think they've had their fingers burnt and they're going to go back in more sensibly this year. And this is the year when it's going to become a really sensible, well-traded and risk-managed asset class.
Hi everyone, my name is Sammy Mana, CEO, co-CEO and founder of Crypting. Crypting is a B2B turnkey solution for crypto. As everybody mentioned here, and obviously the audience, we know the potential, we know the interest that this market is bringing. As a B2B provider, our goal is to simplify and provide businesses with an offer that they can offer their clients and their traders the full capabilities, the full service that they expect to get in crypto. Regarding where we see crypto growing, as Michael mentioned, we see 2018 as a huge year for crypto, stabilizing crypto, getting into exchanges, OTC, through the usual exchanges that we know today for crypto. So we are here to offer brokers the full turnkey solution and any other solution that they will need in order to provide their traders a good, simple, efficient system.
Hello everyone, my name is Maor, I'm the founder of Panda Trading Systems. We are a technology provider that's been in the market for 11 years. And I believe that crypto is a buzz and it will stay a buzz for a while, and I think that brokers should exploit it in order to achieve and acquire more clients. We'll speak about it later on in the discussion, but I think that the opportunity is in CFDs. A lot of people are not sure if they want to operate a real exchange or they want to operate a CFD brokerage. And I think the ability to simplify the process of following the cryptos and even shorting them, that's the real opportunity and the money.
Thank you, Maor. Hi, everyone. My name is Avner Ziv, the CEO of ZotaPay. ZotaPay is a payment gateway service hub connected with more than 200 acquiring banks, payment service providers, financial institutions, and so on. I would divide the main, let's say, opportunity in the Bitcoin and the crypto to main three different topics. The first one is the ICOs. We managed this year to do processing, fiat, credit cards, and bank wire transfer for ICOs. We have a couple of very good case studies, and I think we are the only company payment provider that can process ICO fiat directly from credit card or bank transfer to token, and to settle for the ICO itself in whatever currency they want. The second thing is to see that more and more banks, acquiring banks, respected ones, are more supportive and more open-minded for cryptocurrency and the crypto industry as a whole. We see more banks, more reputable, the pricing getting lower, and so on. So this is a very good news for the crypto brokers or exchanges. The one last thing that I noticed, it's on a personal level. I want to speak about the user behavior. When a user of crypto coming to the payment page, to the payment form itself, the approval ratio in crypto is insane. I would call it the crypto mania. People in the crypto come to the payment page, they check 4 or 5 times the credit card details, they make sure that the website is, the expiration date is okay, they check, they go to the, I don't know, they're doing everything. We have 80–90% approval ratio, which is, let's say, double for the same banks, the same traffic that we witnessed for the FX. So I cannot say what is it exactly, but I can tell that the user behavior, once they're making a deposit or purchasing cryptocurrencies, is much different than FX. People, when want to buy crypto or Bitcoin, they want to do it, they're all in, they have something in mind. I call it maybe the new rush for gold, but we can see from our perspective at least much higher approval ratio, no exceeded the limits, no errors, no nothing. One last thing, that we have also a store ATM in Dizengoff in Tel Aviv, Israel, where we basically enabled this market. People can come to the ATM, put money, and get the crypto to their Bitcoin wallet. So it's one of our ideas also how to enable this market and make it accessible for everyone. So we made the first museum also in Dizengoff. So you are more than welcome to come and visit us as well.
Thank you. Hi everyone, my name's Ian McAfee. I'm the founder and CEO of Shift Forex. Been around since 2009, and our model has been to help people set up their own FX broker. So we make it, we have a turnkey solution to do that. And with crypto, we've gotten a lot of demand, of course, like everybody else over the last year. And we built out a product that lets you set up your own crypto exchange. It's extremely popular, just as everything else in crypto. The other thing we do is we have a fixed aggregation engine in relationships with a few different market makers. So we're pricing crypto CFDs as well. So those are our two most popular offerings in crypto. In terms of an opportunity for everyone here, and I think it's really just offering crypto. I mean, if you haven't done it yet, I mean, it's time. The exchanges have gotten so busy, they've had to shut down user registrations. So, the top 3 or 4 exchanges all closed user registrations not that long ago because they had too many customers, hundreds of thousands of people per day. So that's where the industry is at right now. So it is a mania, as the panelists have said, and I don't think it's going to go away anytime soon. It could, but it'd be at this point almost foolish to ignore it. So I think that's the biggest opportunity right now.
I definitely agree with Ian here. I mean, we do mostly B2B, so we help businesses, we help brokers set up their crypto offering. But what I'm seeing, you got to always look at the end user. And we work with a lot of info product marketers, people who sell newsletters, and they used to sell newsletters back in the days for stocks, for Forex, for things like that, and they would do product launches. A good product launch would be $2-3 million. Now, my friend just did a product launch for cryptos. It was a $28 million product launch of a $500 newsletter. So that's how big it is. Another, so my biggest opportunity is just how many end users want to get into it. I mean, funny story, I was sitting at a bar back home in Florida, and a lady sitting next to me started talking about what I do, and her and her husband were there, and she said, they're like, oh, Bitcoins, I just got an inheritance, I want to invest in Ripple. Out of all things, you know what I mean? So this is an average middle-aged couple. So everybody, and with retail Forex, people just they don't know it as much on the outside. So I see that opportunity for both physicals and CFDs. I want to maybe start this panel with 2 topics. Let's start with CFDs and working with brokers first, and then we could talk about physicals. Those are the primary topics. Then we could get into some other stuff like ICOs. But let's get back to the point that Tom mentions, the futures. So let's talk about brokers, CFDs, and risk management. With futures, I was looking into that. So big market makers, I heard IG is doing a lot of volume on the CME or the CBOE, one of those exchanges. They're using that to hedge. But what I found with futures, for example, is they're not granular enough. There's no minis. It's either a five contract for the ones on the CME and a 1. So 1 Bitcoin is the smallest it can go. So a broker can't really STP. They'd have to hedge their net position. So maybe, Tom, you could shed some light about the futures, how they would do the hedging? And
Yeah. So I used to work in the exchange world. So I was at LIFE and the International Petroleum Exchange. So I know the futures exchange world very well. And it's extremely difficult to launch a futures contract and make it stick because there has to be so much liquidity to make it work. So there was a big rush in this one. And I think the contract size is really important. I think 5 is an institutional size and is not really usable from STP direct from the end retail user all the way through. 1, potentially, but now that when the price got very high, it again wasn't really usable. At about the 10,000 price now, it's not too bad. But the way I think it will work is actually you won't have STP through to the futures. What you'll have is you will have a larger prime of prime broker who will cover in the futures market, and they will offer CFDs out themselves. So they will aggregate the liquidity from the futures exchanges and turn that into a CFD and sell that out into a rolling CFD. This way, you get the benefits across the board. You don't have to have brokers members of an exchange, which is of a futures exchange rather, which is really difficult to do, and you need lots of capital. But you can have the larger prime of primes doing this and offer a CFD out, and then everybody wins. And we've got quite a number of prime of primes that we're working with that, when they can get the clearers to work with them on the futures exchanges, this is exactly what they're going to do. So they're getting lined up. So I think this will happen in a few months. I mean, clearers don't move fast, and it's taking a while for them to get their heads around how to manage cryptocurrency liquidity on the futures market and how to risk manage it. But this is the way I see it happening.
So you're thinking they would hedge off their net position? They'd run like almost like a book, and then hedge off their net position with CME or the CBOE?
Absolutely. So I think they will run a time-based hedging. So they'll hold for short periods of time. They'll run algorithms. Some they'll run straight through for the larger traders, and the smaller ones they'll do some aggregation and they'll do time-based hedging. Yeah, so that they can aggregate those positions together and trade larger amounts with the futures that they can then cover in the different exchanges.
Yeah, we did a little bit of research on that too, and I think eventually they're going to break it up into smaller contracts, the exchanges, and I think NASDAQ is coming out with a product too in the spring.
Yeah, you normally have, with a futures exchange, you normally launch a larger contract first, and then if it's successful, you launch a mini that feeds off the larger contract. So I think the CME one is definitely lined up for a mini, because at 5 contracts, it's far too big for the retail market. One, it sort of sits in between, so not quite sure what they'll do. I think they will have a mini on that one, but not until this one's really going well.
Cool. Let me maybe bring this to another point. So we talked about that. Another thing that we've seen in the B2B stuff is when people think cryptos or Bitcoin, you know, again, going back to the end user, they're thinking buy and hold, right? So what we saw a lot of the end clients do, and you know, a lot of the brokers we work with kind of had that problem. Clients would go long, they would buy Bitcoin, hold it. Brokers want the commission. Brokers don't want that position sitting on their balance sheet. So dealing with that, brokers and also brokers are having a hard time looking for places to hedge. So dealing with that, you know, they started implementing different things like charging really high swaps for overnight positions. And you know, there's some ideas I have about dealing with the long bias, but maybe, I know Ian, you do a lot of stuff on the liquidity side as well. Maybe you could talk about some strategies that brokers can do dealing with the long bias.
Yeah, sure. So yeah, as Bitcoin, when it was on its way up, it didn't dip a whole lot, and when it did, it rebounded pretty quickly. So the customers did pretty well. I think it's been changing a little bit more recently with Bitcoin falling, and I mean, we've started to see with our client base there is a lot more two-way flow now than there was in earlier days. I mean, I think just with anything in the new product, you want to have multiple avenues to hedge it out. You know, if you're taking the other side of a trade, like a lot of brokers are used to doing in FX, it can be, you know, fairly dangerous in this market. You see double-digit moves in a few hours, and there's market manipulation on some of the smaller tokens. So, you know, you have to be extremely careful offering it out, and you know, building out that risk management infrastructure is, you know, obviously very important. So yeah, I mean, just building up as many relationships as you can. I mean, in this conference and over the next few months, a lot of people, more and more people are getting into crypto. There's going to be more and more options to be able to hedge. You know, like I mentioned earlier, we have a couple relationships with a few hedge funds pricing crypto. So you want to, you know, you have to be just very mindful of the fact that this is not FX if you're used to dealing in FX. So.
Cool. Yeah, I think that's for sure. You know, in terms of multiple relationships. What I saw myself when they came in, initially a lot of the players, they just treated it as another CFD. You know, they would just make a book. And then a lot of the brokers, I don't know if you saw, when the price went up, they're like, well, we're not offering any more entries, only exits now. But guys like Ian, you know, when they aggregate multiple LPs, the LP that you're working with is less likely to have that issue. So you want to work with an LP that doesn't just make a book themselves. They might want to be aggregating multiple liquidity providers on their end, or like acting like an ECN. I want to get everybody involved here. So, you know, one other way that brokers should do it is, you know, and I'm seeing a lot of people want, when I say physicals, actually buying the Bitcoin. One of the strategies is have a physicals exchange or ability for their clients to actually, you know, who don't want to trade actively. So you put all the active traders into a CFD product, and you put the guys who want to buy and hold You just have them, hey, here's my service, because you already have the infrastructure. Here's my service to, buy Bitcoin, buy crypto. The more instruments you have, the better. So maybe I can get guys like Abe here to talk about the physicals, because I know it's more things than Sammy as well.
So first I would divide the users into two different groups. The users who want to purchase Bitcoin and to hold it for the long run, to have either certain amount of Satoshis or Bitcoin on their own possession. And the other type, the ones who want to trade on other cryptocurrencies, on the rare currencies, on ICOs, and so on, and maybe to make 5-10 times on their initial investment even. So the ones who want to purchase the Bitcoin and save it, I would go to the physical crypto solutions. They would also find themselves with the hardwares or USB sticks like Ledger or Trezors that are suitable for cold storage. However, if what we noticed is traders, they want fast access, get in and out, buy different currencies. They are more, would go for the CFD version. Us in the store, because we have people that come and deposit cash, so we have no risk from the cash side. But once we get the cash itself, here we start a process that we find very challenging. The first thing is the liquidity. What we do from cash and how we send it to United States, to the exchanges, and so on, it takes a couple of days. But the user wants his cash, he wants his tokens right now, maybe within an hour. The second thing is, let's say once we bought a certain amount of Bitcoin and sold him, and we have the cash, we are exposed also to the market price, so we need to do the hedging. And obviously the last and the most challenging thing is what to do with all the cash and how we put it into the financial system, banking system, and send it to the exchanges and buy in the end the crypto. So it's a very challenging process, and we are proud to be one of the first ones who basically managed to do it, despite all the challenges. But again, it's very challenging today. We see two various different type of users. One, more Bitcoin, wants to purchase, will go for the exchanges. Bear in mind that the exchanges, you mentioned 50 or 100,000 new sign-ups per day. The exchanges cannot accept that many users, and it's very hard, even for us, to open new exchanges and new accounts in the reputable and respected exchanges. And users find themselves, has no choice but to open either in second or third tier exchanges or go to crypto CFD brokers in order to purchase and to get into the game, because they have no other choice today to go to the bigger Kraken or Apollonics and to open an account. It's almost impossible, and if yes, it will take several weeks in the best case scenario. So,
if I can just interject, I'll probably disagree a little bit, respectfully, of course. I think there's an enormous market that aren't being serviced at all. There's not a market of people, whether they want to buy Bitcoin and own the possession of their private keys, or people who want to trade in the alt markets. In my personal opinion, is that the vast majority of people aren't participating because they don't know how. Crypto is a horrible user experience. It's like email in the 90s. Less than 0.5% of the world's population are using it right now. I think the user experience and the process to acquire Bitcoin and other cryptocurrencies will take time to mature and become better from a user experience. But one of the demographics we service is actually crypto funds. And the reason why these crypto funds are actually so popular, there's a number of reasons. One, last year you didn't need to have a very sophisticated strategy to make money. It was literally, if you buy, you had a 10x return. The second reason why these funds are popular is because it provides people with a traditional vehicle that they're used to actually have exposure to this product without having to worry about how do I store my private keys, what happens if I'm hacked. You've got an enormous demographic category of people that are actually, they've got a massive anxiety attack. Every time they open the paper, Bitcoin or some other crypto has gone 1,000x and they're missing out. And so I think crypto funds, CFDs to some extent will prove popular. We saw last year the SEC denied the ETF that was put forward by the Winklevoss twins. Right now, I checked my Bloomberg terminal before I came over here. There are 19 ETFs waiting for SEC approval. At some point, an ETF will be approved. I personally think that that will happen this year. When that does happen, we'll see an enormous liquidity shortage of the underlying product, i.e. Bitcoin. And the reason why an ETF, such as in the same way that funds are so popular, is because it provides people a vehicle that they're comfortable with. You know, they don't have to worry about how do they get Bitcoins, how do they store them, and all the other sort of problems that come with actually holding the underlying asset. I do really think that ETFs and funds are proving extremely popular, even if you have to pay an enormous premium, because crypto is really hard to manage.
I saw that. I was actually at the Miami Bitcoin Expo last week, and there was a bunch of funds there. There's a bunch of mining companies there. And then when they found out that like we could help them with liquidity, I was getting pulled in all different directions because they absolutely have a problem with that. They're looking for places to trade. Let me ask you a question. This is something that I'm not, I want to get some feedback from you guys on. Is you do see like a bunch of these exchanges, and for the retail guy, for the really end user, guy that wants to put in, that lady that I was talking to who wanted to take her inheritance and put it in Ripple, why is there such lousy customer service? Like, what is it? Just because there's not, if they're buying and holding, is there not enough commission to be made? Like, why can't they call in? Because if you think about it, like if you go to one of these places, if one of these places would provide phone support and made it a really easy, streamlined process, has the technology and industry not matured to that? Or is that not enough money that they don't even want to bother? They're like, do it this way or just don't do it at all. What do you guys think are the reasons? Maybe, Sammy, you could touch upon that.
Yeah, I would like to touch this point through mentioning, as Avner mentioned, this market is separated to, let's say, 50% physical, 50% margin trading or CFDs. So the audience here most likely are businesses or end users, and I want to direct this question a bit about the needs and problems that they have. Because you mentioned before about physical. So in the physical, the traders today, it's a bit complicated sometimes to find a good stable source to buy from Bitcoins. But still, it's much, much harder to sell the Bitcoin and to cash it in back to your account, bank account. So that's one of the biggest problems we see on the user side. On the broker side, we can see that they can offer crypto, but still sometimes they require regulation, they require some kind of a license to do that. They usually do not have the inventory and the stable liquidity for that. That's on the physical side. On the margin trading side, on the risk, you mentioned on the liquidity. So today we lack liquidity. Okay, exchanges can never replace a stable, good liquidity for CFDs. Okay, as we mentioned, the future contract is too big. As you mentioned, the support is weak. And you asked why. I believe that exchanges by their DNA are not built to support a B2C environment, activity. Brokers today have a huge advantage over exchanges in terms of support, simplicity, the UI that they offer, okay? They have the experience. They have a lot of payment methods, okay?
They have the infrastructure.
They have the infrastructure. So that's why we see a huge potential here for brokers. Where is the downside? Why is it hard? So as we mentioned today, sometimes you require some kind of licensing, some kind of regulation. So brokers are not permitted to get into this industry like FCA, SISEC, etc. So the brokers has a huge opportunity here using a good B2B service that can simplify for them the ability to do what they're good at, what's easy for them, to sell, to support, and to handle their client in a professional, stable way. And that's why Cryptancy, one of our solutions that we mentioned, clients cannot cash out. We offer our brokers the ability to bring also physical, to buy physical, but also for the traders to sell their crypto, okay, and to cash it out. That's a huge advantage. In terms of liquidity, today exchanges, if it's a CME, future exchanges, or other crypto exchanges like Polonix, Kraken, etc., it's not a good solution. So what we did as Cryptancy, because my previous job was risk management and liquidity, we found an EU-regulated broker that is willing actually to offer liquidity, not by doing market making, but actually doing back-to-back liquidity with good pricing, stable and deep inventories. And that's what the broker is looking at. And then a lot of companies that doesn't have an appetite for high risk and have an appetite for commission-based. As you mentioned, they want to do their commission and just leave the trader with his position. They can do it today by offering them a stable EU-regulated liquidity.
I want to give a few statistics. We speak about the crypto a lot. As I mentioned, in Panda, we manage the technology for a few brokers. Last month, we reached for the number of $200 million of net deposit in the last month. And 70% of this source of funds came for crypto-related campaigns. Most of the campaigns is the Bitcoin code, how to become a millionaire using the Bitcoin strategy, all kind of make money campaigns. I think the retail industry today found a new way to sell make money. You mentioned the email campaign that your friend does. I'm not sure what was the title, but I'm pretty sure it was related to somehow to make money.
Make $1 billion trading cryptos or something
Exactly.
like that.
And we are in a retail FX event, and today that is the main buzz marketing word. And today, 90% of our brokers, I will tell you a secret, even 95, no one is hedging. I sent a few your ways in order to help them hedge. No one is hedging. They're doing an overnight commission of 2% per day. The clients don't care, they just want their Bitcoin. And I think for the brokers, the opportunity is to acquire the clients, but to move them to asset classes that are much more profitable. After all, cryptocurrencies have no leverage. People are not doing intraday trading. So for the brokers, my tip is use the crypto in order to bring them, but using the call centers or other tools to make them trade on other asset class. And Sammy mentioned the second thing that is the opportunity is that using crypto, you can go to jurisdictions that before you needed the proper regulation. So you can go to Estonia, you can go to Gibraltar, you can take an exchange regulation that costs $50,000, and within 2 months you can operate a margin agency, basically a broker. You just call yourself an exchange, and I think that's the opportunity.
I completely agree with all those points. I mean, we've seen our clients, so you know, and this is kind of how we consult our clients, make sure that you can have the cryptos and the other instruments like FX and CFDs all on the same platform, because there's so many more people that want to do cryptos now than any other instrument. You can use cryptos to get leads cheap, to acquire the leads, and then once they're on your platform, and here's another cool thing which I totally agree with you on is they're not that spread or commission sensitive. I mean, we have our clients that are offering out to their end users Bitcoin at like 90-point spread, you know, $90 spread, you know, like really high spreads, and still they're doing a ton of volume. So once you get them in, you get them trading, and then you have the other instruments on the same platform, on the same account. And then to add to what you said, it would be cool to have like a newsletter or some kind of a ongoing content that would keep them engaged. So that's what we're also helping some clients with, is getting them ebooks, getting them ongoing newsletters from experts on trading that promotes two-way trading on crypto. So that's how you can get more volume, and then you get them into those other instruments.
Can we talk about the technology in the exchanges? Because coming from the futures exchange world, I was really surprised when I saw the physical exchanges. First of all, when I saw the technology they use, I wouldn't really call them an exchange. They look much more like a broker actually than an exchange. And in a futures exchange or an equity exchange, the technical part of doing the trading is probably about 10% of the company, and the rest is market monitoring, customer service, and making sure that it's a fair market that's operating. All that side seems to be missing in the physical exchange. They've just gone straight for the technology offering. And when I spoke to I've got some friends who are presidents and CEOs of the futures exchanges who didn't know much about the physical exchange world. They were horrified when I said there isn't even a phone number for some of these guys. And they said, so why I could have millions of dollars of risk there and there's no one to even ring? And they said, how on earth do people manage that? How does that work? I said, well, Yeah, and when it goes wrong, as it has done recently, you can't speak to anybody. You can email them, and I had a problem with Coinbase, and it took them probably 2 months to answer an email. Extraordinary how that works.
But what other sort of asset class out there does onboard 200, 300,000 people a day? In defense of my peers who run these exchanges, it's definitely an asset class that has this hyperbolic growth. And one of the moderators said, why do these exchanges not be able to provide services as a traditional exchange? A traditional exchange won't allow a customer to onboard in 2 minutes and then trade $5 worth of something. So I think there is definitely an enormous pain point around infrastructure, and infrastructure costs across everything from technology to personnel, et cetera, et cetera. I think one of the reasons why some of these venues don't have phone numbers, as crazy as that sounds, is because literally it's probably worse actually having a phone number published that can't be answered or is always engaged. We've seen Brian Armstrong, CEO of Coinbase. We've seen CZ, CEO of Binance, who've actually said that these are pains that no other sort of asset class has ever gone through. There's no other entity or service provider that I know of, at least, that is onboarding 300,000 people a day.
But isn't this the wrong asset class for people to be covering in then? So we're using a physical market for the wrong purpose. So for covering margin CFD trading in our world, we shouldn't be using the physical exchanges, then it's the wrong place to go.
Do you guys have any idea of what the average profit per customer is on these exchanges? Because, so you're kind of saying the problem is, guy comes in with $3,000 and he buys point whatever of a Bitcoin, and that's it. And they're not making any commission, so why even provide him phone support to begin with, right? Is that kind of the... And they come in large amounts, right?
You can sell the lead. You can sell the lead to a CFD broker.
Upsell them, you mean?
No, you can sell the lead from the exchange to a CFD, broker and make a 500 CPA.
Yeah. Well, I think that's maybe what an idea should be, is figure out a way to upsell the, because they're getting that many leads.
Alex, before we move forward, I wanted to touch in regards to why this world still is not very quick and easy. The user experience and interface is not chick-chack, open your account, make a deposit, and have your Bitcoin. And why it's not going to be like that in the really near future. So the main challenge, the first one is the KYC Compliance and AML checks that these specific exchanges needs to go through, or the regulated companies. So in the essence of it, we know Bitcoin is anonymous cryptocurrency, everyone can pay, nobody knows. But you open an account in the exchange today, you have to give them their passport, you have to sing a song, you have to show them your ID, and stand on one leg. So it's not anonymous anymore. In order for you to open an account, you have to show your utility bill, recent, passport, everything. So it's a little bit lost the thunder on the anonymous side. However, these exchanges, because they are regulated and brokers and they have the licenses and have their own regulatory supervisions, they have to collect this KYC. Because of the enormous number of people that want to open new accounts, they will do almost anything, so they will provide it. And also for the AML, in order for them to understand where the money goes through and future maybe taxation of the local region they are located in, they must have in the database to collect and save this specific information.
But only if you pay with fiat. If you're using crypto, you can trade.
Guys, I'm sorry to cut it off right now, but we have 5 minutes left, so maybe it makes sense. I know there's a lot to say here, but maybe it makes sense open it up for questions from you guys.
One last sentence, maybe? Sorry.
One sentence each?
Yeah,
all right.
One sentence for me.
Deal.
So when people come to buy with credit card online, they have always the possibility to claim for chargeback later on, even up to 6 months later, or JCBs even one year after. But once the exchange gave the crypto, it's the end users, it's belonged to him, it cannot claim back. So here is the main challenge, basically why it's very hard to do fiat online to crypto, because of this inherent contradiction.
Cool.
Alex, I want to mention something, actually very fast. We spoke about exchanges, crypto exchanges. I think we need to have a lot of respect to these guys, okay? Because they were the engine and the first wheel that moved this market, okay? And today, that's why we're sitting here, Okay, so they did a great job with offering the crypto to the end users. In a way, they did the 50%. Our job, our responsibility as a dedicated B2B only crypto solution is to take it from here to the next stage.
Take it to another level.
Okay, with automation, with liquidity, with everything that we know and we know how to do to bring the people sitting in here the ability to buy in easy. And they did a great job. We just need to continue, and that's our responsibility.
It's a very good point. Very good point. Well, I'll open it up to you guys for questions. I know we have a few minutes left. You got your hand up first, so go. ICOs. ICOs. I knew of them before, but I learned a lot more about what's going on with ICOs, kind of. Some are, some are not. Anybody else?
Guys, it's a
Other
great
questions?
opportunity, yeah.
I couldn't hear that at all. Yeah. I have to jump up.
Go, give him.
People's accounts that are dealing with cryptos? Anybody want to?
What's the question, sorry?
What do you think about the banks that are closing accounts of people that are dealing with cryptos?
This is the last push of the traditional finance, trying to do everything they can to stop cryptos. You know, Bitcoin and cryptocurrency represents pretty much everything banking doesn't. 2/3 of the world's population don't have bank accounts. These people are not going to go from unbanked to banked. In the year 2020, 75% of the 2/3 of the world's population will have smartphones. Whether it's Bitcoin or something else, they're going to be using decentralized technologies and cryptocurrencies as a new method of bartering. Think about it, that this is the last push that the traditional financial industry has to try and prevent it. I think that this will be the last hurdle that we'll see before banks actually start to embrace this. My personal opinion will be private banks will be first. I strongly believe private banking will be the first to offer crypto products, because I know that for a fact, because the private banking clients are dealing with us buying this product.
We're seeing that with some clients already in the bank side, yeah.
And once that happens, it'll be a domino effect. And once that happens, we'll see it coming into the investment banks and then finally in the retail banks. In Switzerland, Falcon Bank is already offering Bitcoin-related products. It is happening. To answer your question, it's in the quickest way possible. I think this is the last push we're going to see from the traditional financial institutions to try and prevent it. I personally think they're going to fail, but this is that last hurdle that we're going to have to overcome.
All right, guys, I'm getting a signal for a hard stop here, so we're going to finish it off, but we'll be here if you guys have any more questions. Thank you.
Thank you.
Thank you.
Thank you, everyone.